We just witnessed something crazy. Almost every stock roaring higher except the mega cap 8. And this type of price action is not rotation, it's not a broadening out. It's something we call dispersion, and we need to talk about it. But we also need to talk about bond auctions. It flew completely under the radar today. There were some incredibly worrying signs we need to address. So as the biggest OPEX of the year approaches and analysts eye down record highs for 2024, let's talk about 2024, December, and trade opportunities leading into OPEX this Friday. Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. And I'm not even kidding you when I say this, guys. It was only big tech, Eli Lilly, and United Health that got sold off. Every other stock, I mean, even in technology, look at semiconductors, right? Look at software as a whole. Inside technology just got bid up. It was the biggest names. I mean, there were like a couple of pockets of reds here and there. I am exaggerating a little bit. Truthfully, guys, it was just a bid up on everything that hasn't rallied this year. Looking at the majors, the Nasdaq still put up a very good day, up 0.85%, and the Nasdaq 100 equal weight was up 2%. And look at the best performing stocks, large cap value, not growth, as well as these mid cap names. They really were the beneficiaries of today's trade. Looking at sentiment, the latest weekend poll is up 126 votes. 56% of you said up in the next 100 points for the S&P 500. 44% of you said down. Another bullish week for you guys, and we'll see. So far the bulls are winning this week. Bulls won last week. We'll see if the rally continues into OPEX this coming week. Look at what we have up for earnings. So Oracle reported earnings today. They were down 10% on a revenue miss. I believe it was pretty brutal after hours trade, but we do have a couple of big names. Adobe after close on Wednesday, as well as Costco. And how about you guys leave in the comments which one of these names you want to see me review in my weekend daily recap video. Costco is hitting all-time highs, but Adobe is one of the companies at the forefront of the new super cycle, at least according to Kowtow. AMD is at the forefront of image processing, image editing, video editing, and this new generative AI cycle could be the next super cycle, which could then lead into the bigger super cycle of supercomputing and quantum computing. Now, this is going to be very, very big, and this is why I am in the stocks like Google and Meta. I own significant amounts of them, as well as the Qs as a whole, and this is why I think the QQQ is still a relatively good investment, because if you put your money into the Nasdaq 100, you're getting all of these names right here, except for maybe TSMC. We'll see where OpenAI lists when they do go public. OPEX week, trillions of dollars in expiry is happening this week, and generally it's a positive week. Normally finishes at about 0.5%, 30 up weeks, 11 down. So it's about a 73% win rate. And the same is for the week after. Actually, it's much more bullish, 0.8% and 0.67%. 31 wins, 9 losses, up 75% of the time. The stats are on the sides of the bulls. And we could keep running because Gamma is forming in the 4700 strike. This is the call resistance level that we've been watching for a while, the 4600 level. It's been a sticky Gamma strike that, we've pretty much traded around it, saying we're just going to chop between 4500 and 4600, and that is probably going to change because have a look here, a ton of Gamma is forming on the 4700 strike. After OPEX, once this Gamma gets rolled over, we want to see where traders are going to be positioning themselves. Are they going to position it at the 4650 or the 4700 strike? We could go lower, but as it stands right now, there's already a ton of open interest in the 4700 strike, and if we do go to the 4700 area, probably means higher price action into January. So we did have bond auctions today, and guys, I put this up on Twitter 4 or 5 hours before open, and I said the Treasury is auctioning $108 billion in 3-year, 10-year, 30-year bonds, and then tomorrow on Tuesday, $213 billion in shorter term bills. And if we have a poor auction, it could lead yields to spike, maybe some volatility. That's exactly what we saw. The auction was ugly, guys. The 10-year priced a yield at 4.296 when it was supposed to be issued at 4.282. You might think, oh, it's just 1.4 basis points. No, that's a lot. That's actually quite a lot. It was the third consecutive tailing for the 10-year auction and the 9th tail in the past 10 auctions. And you have to look at it like this. The market was not talking about this. Everything was on this dispersion trade everybody was talking about. We do need to be worried about here because bond auctions are still not seeing the type of enthusiasm and buyers that you would want to see as a whole. And this was the sole reason why yields were up on the day. Look at the 10-year, 20-year, 30-year. They were all up on the day. Not significantly higher, but they were higher. This goes to show that right now stocks can move higher as well as yields. That being said, are yields a good place to put your money in right now? Probably, you could say. The treasury bill versus the S&P 500 earnings yield. The 6-month treasury bill is yielding more than stocks. Had you put all your money into treasuries at the start of the year, there was definitely an opportunity cost that you missed there. And that's why you should never ever be 100% in cash. You should always be to some degree invested in bonds and stocks. Because if you look at it on a very long time scale, from 1900, $1 invested, equities were the best performing asset. You would have increased your $1 to $2,600. And to put that into perspective, if you had put $1,000 right there, you'd have $2.6 million today. This is why you should always be invested in equities, in bonds too. Always hold cash, but it's something that you really do want to rotate into different asset classes. And, especially if you can get in on these dips right here, it really is generational buying opportunities when you do get, these type of dips. And even in the bond market, I'm not saying don't invest in bonds. I hold bonds, and I think they're a pretty good investment if you just want to capture yield as well as, some form of appreciation. How exactly do you know when to trim exposure from bonds, from equities, go to cash, or go from cash and bonds into equities? You could use something like a bull market behavior checklist. And according to this one right here, 8 out of 9 signals are bullish. Above 6 or more is, very, very bullish. And the only reading here that isn't bull market-esque is copper and gold above the 200 moving day average trend. Everything else from risk on, risk off indicator to the S&P 500 above its moving 20-day average. It's all there, guys. So, as it stands right now, all dips to be bought until this turns. And what does this mean? It pretty much means buy, hold, and wait out the volatility. And if you have done that, buy and hold investing outperformed almost every other chart-based trading tool, and just goes to show all you had to do was put money on the 1st of January into your stock account, and today you'd be up 20% plus in the S&P 500. One of the biggest sell signals this year was a pending recession, and it hasn't really materialized, mostly because non-farm payrolls, real consumption, household employment, real GDP are really, really strong right now. And if we do want to see a recession, you want to see all of these turn to the downside. Now, I am personally in the camp that we're going to get a very mild recession or some form of a soft landing. So we do want to see some of these indicators turn if we do get a recession, but if we don't, I'm invested regardless. You guys know I'm invested. Right now, I'm in quality stocks, I'm in bonds, and I'm a tiny bit in gold, about 2 to 3% in gold. Now, let's assume we get a recession and the Fed cuts rates. What do we expect? Well, we expect quite a significant drawdown, anywhere from 15 to 20% 10 months in. But if the Fed does cut rates in March and we don't get a recession, we often see multiples expand and the index rally quite significantly. Let's say we get the recession. Where do we want to be? And the best asset class we probably want to be in is large cap growth. On average, market drawdowns, it's about negative 8.5%. Also, large cap blend, so like a blend of value and growth, was the second best performing sector right there. One place that looks attractive to capture both large blend and large growth is just the S&P 500, particularly the equal weight, trading at 15.3 times earnings. Probably a little bit more now, probably closer to 15.5. I know the S&P 500 is actually trading at 19, so this data is about a week old. Great value here in the S&P 500, and you saw today the equal weight is rallying, and I think the equal weight just looks attractive. I think if we avoid a recession, the equal weight is going to outperform the S&P 500 in 2024, and we're actually starting to see a bit of this. We sort of saw the equal weight versus the market cap weight index. We're seeing a rotation, out of these mega cap names and more into the rest of the index. And this is actually really good, because if this goes higher, it doesn't mean that the S&P 500 market cap weighted is going to go down. No, it just means that probably all stocks in the index move higher. Now, this is actually what is called the dispersion trade. And the only sectors that were red today was regional banks and, communication services. And regional banks isn't even a sector. It's like part of the financial sectors, which was actually up today. If you look at the XLF, everything else, including technology, semiconductors, software, staples, everything was up today. And it truly was a dispersion trade. It was literally get money out of the big boys and into almost every other sector in the market. And it just goes to show how concentrated you know, the Magnificent 7 or the Mega Cap 8 is in the market. But let's actually break down some of these sectors, you know, and try to find ones that are pretty good value relative to the S&P 500. Have a look at energy, right? Currently trades at about a 10 PE. We do know why. It has to do with demand and supply issues in energy, but still very, very attractive. Look at this free cash flow yield, 9%, and EV to sales, enterprise value to sales, trading at 1.4. To put that into perspective, right? If you find a company that's worth $1.4 billion, right? That company is making about $1 billion in revenue. That's essentially what this is telling you. Compare that to like information tech. The actual enterprise value is 7 times what they're making in sales, trading at PE of 26. I'm personally not a big fan of energy. I do think it probably does do pretty well next year. I think the real beneficiaries next year is going to be financials, it's going to be real estate. And you actually look at comm services. There's some insanely high quality names in communication services. Meta, Google, currently trading at a 16 PE, right? And look, 5.7% free cash flow yield. That's more than treasuries, and 3.5 times enterprise value to sales. So, you know, a $3.5 billion company is making $1 billion in revenue. This is something you guys can look at right here. The communication services, XLC. I also think financials into 2024 look very, very cheap, all things considered. Now, looking at the year ahead, and the index always reverts to its mean. This is where we are right now, and this is the 4-year presidential cycle. And what we've done in those 4 years in Joe Biden's presidency, we diverged both on the upside and the downside, always reverted back to the mean. And if that is the case in 2024, do expect higher price action towards the end of the year. Now, let's talk about December specifically. November, the end of November into December, we get a bit of choppiness, and we do bottom around the 7th to the 14th, which is where we are right now, before we do expect this big run up. And you see this dip right here, we could have already made that. Now, this is the aggregate December performance versus 2023's performance. Here's the legend. This dip right here could have been the December dip we were looking for, and we could just like revert to the mean and then move higher, or just go higher. As it stands right now, it does look like this might actually be the low for December. Anything could happen, but with the way price action is going right now, if we continue to see this dispersion trade and maybe some more buying come into the bigger names towards the end of December, it's going to be very, very bullish for stocks looking into 2024. Now, let's go back to Gamma, guys, and I showed you this earlier on. This is the strike we're looking at, and 4600 is our high Gamma strike. What we're seeing in the options chain, 36% of Gamma is expiring on Friday, right? $388 million, as well as quite a lot of Gamma expired today and for the rest of the week. There's about 50% of the total Gamma outstanding is expiring leading up to OPEX. What we really want to look for is where this Gamma is going to be positioned. If these guys are degenerates like myself, they always want to be exposed to something. They're probably going to move this to the 4700 strike. As this Gamma rolls off, we're going to watch this Gamma chart very, very closely, because if we reposition here, it's going to be insanely bullish, guys, for January 2024. Now, let's hop on the charts and have a look at this. Now, this is the S&P 500, and looking at the year to date, very, very strong. And we finally pushed into this level we've been talking about for a while, 4630 level. We close at the top end of this level right here. And pretty much I said, if we close in this level, it's very, very constructive for us to go and make new all-time highs at the end of December, at the start of January. And I think that's what we're going to go ahead and do now. And if we actually have a look at where we are, and we are about 4% away from new all-time highs, just under 4%. And we're actually closing in on the highs in March 2022. Now, looking at today's candle, it was just like a bullish candle. We opened, and where we just bid up all day, very minimal wick, but it was a very, very bullish candle. Bulls came in here, took us all the way up, and this wasn't even bears. This was just a little bit of profit taking. We left a very small wick right there. Very bullish candle right here. Breaking it down a little bit further for the rest of the week, I think truthfully, we're probably just going to chop in this area. And if we get the Gamma strike, the core Gamma strike at 4700, I think we're probably going to move higher to 4650, 4670 to 4700 through to the end of December. If the core Gamma strike stays at 4600, probably means we're just going to chop in this area, probably this area for the rest of 2023. At least that's what I'm expecting. So everything depends on where option traders reposition themselves. Now, looking at some unusual options activity, two things to note. We have Align Technology right there, as well as Enphase Energy. Enphase is actually up on the day, but Align Technology was down, and we're going to talk about both of them very soon. Alibaba down another 1%. China just keeps getting absolutely hammered. Now, it was a fairly average day, below average, I guess. 34 million options contracts, 56% calls, 44% puts. At least we're not as bulled up as we were last week when we hit like 58% calls. Very bullish. The reason why I wanted to speak about Align Technology and Enphase Energy is because the Nasdaq 100 is rebalancing, and both of those names, Align and Enphase, are getting removed, as well as eBay, JD, Lucid Group, and Zoom. This used to be a Nasdaq darling, but we are getting some quite a good additions. Splunk and DoorDash are coming in. I have no idea what MDB is, but we're getting CDW Corp, Coca-Cola, Euro Pacific, as well as Roper Technologies. So just to be aware, I just thought I'd make you guys aware, because I'm sure that the QQQ is probably some of your biggest holdings in ETF form. And data this week. So we had the bond auctions. Tomorrow we get CPI, very interesting. Food and energy, month over month, year over year. CPI and core CPI. And then the day after that we get PPI. That's going to be big. And then Wednesday, the big one, FOMC rate decision. I don't think anything's going to come from it. Then we got jobless claims, guys. Retail sales on the 14th, and then on the 15th, we just have the PMIs for US services and manufacturing. But if you've made it up until here, guys, thank you so much for watching. If you like this video, leave a like, subscribe, hit the notification bell, and leave a comment below. You know I love you guys.